All right, this is part two. I thought I'd do two shorter videos instead of one long one. I want to look at the Russell, the 8-tick range bar. This is great if you got TradeStation. It's not a momentum bar, it's a range bar. So we start at 9:30, and there's a setup right here at 9:30, and that's the one. And you can see that it's a dark green. That means it's what we call an add-on trade or a subsequent or additional trade. The calculator's tracking this trade back here, the purple one. You can see the stop going across. We're not interested in that trade because it's too early. That's over an hour before we have to start. Start at 9:30, and we're not going to get in sync. We're going to wait for a new setup. There could be an earlier setup if it hasn't yet triggered in. That's more of an exception. But in this case, there's a new setup right at 9:30. I also love these trades where you got the 50 EMA pushing lower, down, down, down to meet up with the 200 while price is making lower highs and lower lows, clearly trending down, and every time it comes up and meets with the 50 EMA, it finds resistance and pushes lower. Okay, that's usually a good sign that the market's rolling over, and as the 50 is pushing down on the 200, you can see it starting to curl down a little, and it's pushing down at a faster rate. These are really good trades most of the time, right? So I'm interested in that. 1186.7. Now there's a little trick in the calculator that's very handy. If you open it up, we can make this trade, which is not being tracked, right? The calculator shows us the trade, but it's tracking the purple trade. But we can open up the calculator and just for today set the start time to 9:30, and it's going to eliminate all the trades prior to this. And now you'll see that it's actually tracking, and you can make that trade trackable so it's easier to trade, because now there's one less thing you have to think about. Use the power of the calculator. It knows when to push the stop down. It knows how to trail the stop, right? So you could exit at target 1 or target 2 or target 3 or all three. $140, $220, $300, and trail it down if it goes lower. So that's basically a one and done trade. It took about 8.5 minutes, hit all its goals, hit new all-time equity highs for the trade plan, and in 8 minutes you're basically done. Yesterday was the same thing. It was just one and done. It's always great when that happens, especially when you put a string of them together over several sessions. It's really nice. Really fun to see and to experience that when you're trading the counterpunch. Let's look at the next market. All right, so we'll look at soybeans because this truly is a one and done trade plan. We use hybrid mode. It's a new way of using our different styles of trading. It's standard mode, but we're not going to stop and reverse or use a reversing trade as a stop unless it agrees with the directional indicator. So that's if that were to happen, I'd point it out to you. In this case, it was very straightforward. 8:30 Central is when you start. You have a long trade, triggers in, pushes higher, hits target 1, hits target 2, misses target 3 by 1 tick. When that happens, I'm going to take that position off at the earlier target, target 2. Okay? So, take profit at each target just like you would with Forex. 9 ticks is 2.25 points, so it's $112.50. 15 ticks is $187.50, and that would be for target 3 also, since it just missed by 1 tick, and then it stops out with a trailer. Basically, it's one and done. That's the whole point. All right, so finally, we'll look at the YM, and the YM starts right at 8:30 Central, and it's in trend mode. So you got a short here at 8:32. It's the only trade, and it pushes through. It comes down. It doesn't quite get to target 1, and in fact, it's going to stop and reverse to long, right? The stop is here. Again, you can go ahead and use the calculator. Set it to the to the setup bar time, 8:32, and it makes that the trackable trade, you see? So, you're risking 22 cents or 22 ticks, 22 points. When you stop and reverse, you always want to adjust up a couple ticks or points plus key level adjustments if there is any, but this goes to 73. Basically, it gets long at 73, hits target 1, that's good for now 8 points, hits target 2, which is good for 15 points. So it got from 59 to 73. It basically lost 14 points. So, you know, are you positive or not? I don't know. If not, then take another trade. Depends on how many positions you're trading. So you get this long trade here, and it goes long, and it's, you know, you're going to adjust it above probably that little spike. Remember, you can make those 2-tick adjustments, which means, you know, you're going to skip, well, target 2, you can take profit there at 9 ticks. And then it misses target 3 by 1 tick. Like I said, I like to exit that position at target 2 if I miss it by 1 tick. So, you know, however you trade that, it's a style thing. But the stop moves up, you're in a risk-free trade, and then it pushes a little higher, and then stops out right there. But when you add it all up, 3 trades, power of quitting. Again, take what the market wants to give you. The YM has been kind of range-bound these last couple days in front of the election, but still the ability to quit with a positive result. Finally, I want to call your attention to an interesting trade idea that was something I was thinking about. Whether you're, you know, politically or morally opposed or for the legalization of marijuana, one thing for sure is that there could be some amazing trade opportunities, and the market is already anticipating that it's going to pass in many regards. And there's this penny stock. I'm not really one for trading penny stocks, but when I saw this one, I got very interested really quickly. It traded 16 million shares today. So, you know, that says a lot. And you could see from way back here, it started getting long. I mean, that was back in September. It was at 3 cents a share. Imagine if you picked up, I don't know, 50,000 shares or 100,000 shares or whatever at 3 cents a share. It's trading up over 20 cents a share now. So there was a nice buy opportunity here. There was this one. This is when I saw the trade. It was this trade. I grabbed it at this price. And you could see it's zooming up. You know, do you trade it? Do you flip it? Or do you hang on to it for what could end up being, you know, one of those dream come true trades where penny stocks turn into dollar stocks? And who knows? I mean, we'll see what happens with the election results. But there's a lot of opportunities like this. You know, you want to look for the ones that maybe have some good opinion on it and good reputation maybe, and of course lots of volume. But regardless, even if you were just to trade in and out, that's a nice trade. From 13 cents up to 21 cents, or even target 2, which is 19 cents in just, 2 days, basically. So anyway, just food for thought, right? I mean, this is even delayed data. It doesn't really matter. This is a daily chart, so it doesn't matter. These are swing trades. I mean, if you picked up 10,000 shares here at around 13 cents a share, it's going to cost you $1,300. Anyway, just an idea. There's so much you could do with the counterpunch. If the price is moving, the strategy loves the chart. Hope you enjoyed this video, everybody. This is TJ, NetPicks, Counterpunch Trader. See you on the next one.